Is that great investment actually worth it, or is it just another job? In this video, I'll share my go-to investing shortcut to cut through the noise and find out. T.R.E. is the shorthand that I want us to remember when we're thinking about investing and saving. To this day, this is the investing mental shortcut that I use the most often. I use the features of this shortcut all the time in conversations, when I see things online, when I'm reading things about investing opportunities. It's based in sound investing principles, it's based in research, and it also helps you cut through a lot of the noise and pick up just the signal. The first aspect of investing is saving is the T component, which is that time measures investing. Anything under 5 years is not an investment. We measure investments in decades. So whenever I hear someone talking about an investment, the first question that I have is, what is the time horizon? Is it more or less than 5 years? And if it's less than 5 years, it simply does not meet the criteria for an investment by these standards. The second is the R in the T.R.E. shorthand. Projected returns of greater than 7 to 9% are fishy. The overall market on average has returned between 7 to 9% when you adjust for inflation. What's usually hidden when somebody gives you a high projected return is that the potential downside. So if somebody says, oh, this can return 20%, then the question is, well, what's the possible range on the downside? Because maybe it can return 20%, but there's an equal risk towards the downside that it actually returns nothing, that it goes to zero. So whenever we hear a rate of greater than 7 to 9%, we have some questions to ask because something's up. Something's not quite right. And then finally, the E in the T.R.E. shorthand is effort. Any investment that requires lots of effort is a job. So you might be getting an investment, but you're also getting a job. And when we're getting a job, we need to make sure we're qualified, we're good at the job, and that we're actually getting paid for our time. And so it's T.R.E. Time, rate, effort. The time component is anything under 5 years is not an investment. We measure investments in decades. Rate. Anything above 7 to 9% is a fishy return. Something is happening. We need to investigate further. And then finally, effort. Anytime an investment requires lots of effort from me, then I've picked up a job. I need to make sure that I'm good at the job and that I'm getting paid for my time. The T.R.E. shorthand is a powerful tool to help you cut through the noise and pick up just a signal on whether or not a suggested quote-unquote great investment is in fact a good idea or not. These are great investments versus the T.R.E. method, and these are investments that you might actually hear from family, from friends, from people online. We are going to apply the T.R.E. method to see whether or not these are in fact good ideas. So the first is a house flip. So flipping a house, buying a house, and then renovating it, and then trying to sell it for a profit. Somebody comes to you and says, let's buy this house and let's flip it. This will take about 6 months. And the expected return on this is between 10 to 20%, somebody says. And the method of investing here is to buy and then totally gut it, repair the house, and then sell it. You can see that on all three, time, rate, and effort, this does not qualify as an investment. This has a very short time frame, just 6 months. The promise of return is 20%. And the whole buy, gut, repair, sell approach means that there's going to be lots of effort that is employed. And so this is not an investment. This is a job. Anytime we are flipping items for a profit in the short term, we are not investing. We are engaging maybe in business activities. We have a job, and we might actually profit from it. But it's important not to get that mixed up with an investment. So this is not an investment. This is a job. When you're deciding to take on a job, standard questions apply. Am I good at the job? Am I getting paid at the job? How much am I getting paid at the job? Will I enjoy it? These are all questions that we seek to answer when we are pursuing a job. And if this opportunity arises, those are the same sets of questions that we need to be asking about whether or not we want to take this on, because this is not an investment. This is a job. Second, stock or crypto trading. And the idea here is that someone says, you can trade daily, And the projected return using this particular method is 15 to 30% annually. And the way that you're going to do this is with lots of technical analysis. And that basically means that you're going to be reading charts and trying to find some sort of underpriced security or asset, and you're going to try to trade it for some profit. And you can see here again that this does not pass any one of our 3 metrics in the T.R.E. framework. First of all, this is a daily engagement. There is 15 to 30% projected returns. And again, it involves a particular type of work. And so this is not an investment, this is a job. Third up on our list is this opportunity that's being presented to us. And I pulled this directly from my email. This was an investment opportunity that was being shared in the Muslim community in the city that I live in Edmonton, in 2006. And the idea here is that you would invest $44,000 to buy some property, and that property would be developed over time, and that you get a return. You can see here from the advertisement that they are indicating that the investment time horizon is 4 years. There is a annual return of 20 to 30% that is being projected here. And the method here is that you buy and you wait. And so you wait 4 years and you get your money back after 4 years, plus whatever profit is earned from the sale of that property. So $44,000 turning into $88,000, 100% return over 4 years, 20 to 30% annually. This seems like a very lucrative investment opportunity. And it's land. And a lot of people understand land. And you can see also a little bit of anchoring bias being employed here by comparing a depreciating asset like a car to the purchase of this land. So here we have the time frame not working because it's under 5 years. It has a very high return rate. 20 to 30% is very high. And whenever we have a very high return, then what's being hidden is the actual downside. If it's above 7 to 9%, then the reality is that there's probably a very high risk attached to this opportunity. And then finally, this does pass the E part of the T.R.E. method because all we have to do is buy and wait. But when we have an opportunity like this, we don't call this an investment. We call this a speculation. This is us speculating or trusting the speculation of someone else that this piece of property over a very short time period will return very high returns. This does not pass the standard for investment based off of the T.R.E. framework. And so this is speculation, and we would have to proceed accordingly. One thing I can tell you, by the way, is that I know people who are still holding the property from this purchase. People who purchased this land back in 2006 or 2007 and are still holding it because they weren't able to sell the property. And many people didn't understand the risk that they were taking on by purchasing land in this way, by putting all of their money into this one single asset. Sometimes people were pooling money together, families were pooling money together to buy this asset in hopes that it would have this really high return in 4 years. And it did not work, unfortunately. And the T.R.E. method would have helped them see through the noise and just pick up the signal that this is not an investment, this is speculation. And then finally, a market purchase is being promoted, and here, as you can see, the time horizon is 10 years. The annual average return is 7.6%, and the method here, using this particular robo-advisor, would be to have a monthly automation deposit. And so on the time horizon, it's more than 5 years, 10 years. The return is right in the middle of our 7 to 9% return annually, and there's no work that we need to do after the automation is set up. This qualifies for an investment. I'd like you to use a T.R.E. method out there. When people are talking about investments, ask what the time horizon is. Ask what the projected returns are. Ask how much effort is needed for this quote-unquote investment to work. And if we use a T.R.E. method, I think we'll be able to cut through a lot of the noise that runs through this investment space. This video is part of the Muslim Investing 101 series. Be sure to check out the entire playlist. And if you find the videos on this channel beneficial, please like, subscribe, and share.